Alright, welcome back. We got another week, and this week is really not, so this is the first week where we ended the quarter in the new yearly system. So we have the weekly and the quarterly video combined, and what I used to do was I had one weekly video, then I had one quarterly video, and then I had a since inception video, and then sometimes I would have 4 videos where it would be a yearly video too on top of that. So in some cases I would reach 4 videos. Now I typically max reach should be around 2. So I'm typically just going to be doing 1. So I'm combining the weekly, which is what I usually do, plus some of the quarterly information, which is going to come out each quarter. So that's why I still want to have the quarter video, because there's some info in here that I only like to really share each quarter once. And that's why I like the quarters for. So I'm still going to keep the quarters in the title. There's also other factors I like having a quarter system for, but for that reason, they're still going to have a quarter in the title. And the performance number is going to be since the first quarter started. So that's how it's going to work. And it's kind of like a hybrid. I think it's the best of both worlds, so I like it. And it's easier for me, less videos, and it's still the same amount of information. I'm just going to do a yearly update once the year ends, and then a since inception video once the year ends. So that's what I'm going to be doing. Also financially, the quarter video is actually, the quarter system is better. No, it's actually worse than the yearly, because I didn't realize this while first starting, but if you were to have, let's say, the last 4 quarters I've had have been very good, and then this one has been a bit worse, and it's as expected, but I realized that really it's better to have a yearly system, because, for example, let's say in my first quarter I underperformed SPY. In the second quarter I outperformed by a lot, right? So that's happened, or not happened, but it could happen. So let's say you go maybe have a negative 10% return and then have a 40% return, right? So your overall return, just without any sort of fee, for example, is around 26%. And let's say SPY did 10% and then 10%. So that's a very good SPY, but let's just say in the case of the scenario that happened. So SPY would be at 21%. So you're outperforming by 5%. So that's the net. Now, if you're on a quarter basis where the financials, like each time the fee gets on a quarter basis applied, the first quarter I don't take a fee, right? Because I'm underperforming. Now this next quarter, SPY did a 10%, so I would take 50% of the outperforming. Outperforming is 40 minus 10, that's 30. 50% of that is 15. You add that to 10, which is SPY's level, you'd receive a 25% after fee return. So let's say, so you have a negative 10% because nothing really happened there, I wouldn't take anything, and then you would have a 25%. Now we're looking at only a 12.5% return. SPY in that same time period did a 21% return. So on this method, if you just multiply the percentages of each quarter, I outperformed. But your net return, as the fees were a lot higher in the second quarter, made you underperform by a lot. You're looking by more than 8% or 8.5%. So now let's say you do it on a yearly system, right? So for example, if you did so on a yearly system, it would be a lot better, because you would have that 90, let's say you put in money in the first quarter, loses 10%, next quarter makes 40%, and you want to take it out. Now, then that would work by having the net 26% return I said before, because you have a negative 10, so 0.9 times 1.4. So you have the net 26% return. How much is that outperforming from SPY in that same time period is 5%, because it was 10 times 10, so 1.1 times 1.1, 1.21. You subtract that, it's a 5%. You only take 50% of that, so 2.5, and you're left with a 23.5% return. And that's a lot better than a 13% return net. So that's what I realized a couple of weeks ago, and it just seems more fair, and I like it better. So I'm always trying to find the best solution, and I think it seems the best solution and most fair, and it's really just what makes most logical sense. So that's what I'm going to be doing, and that's one of the most important parts about not using the quarter system, which is really, I wasn't using it before, but in this method it's a lot better to not use it. Now, for example, in like videos, or if I want to do like these video updates or whatever, like non-financial things, then it's better to have the quarter system implemented. So it's kind of like a hybrid of the versions, so like the two systems, which I like to do. And it's also better mentally because I'm not focused on a quarter by quarter basis. I'm focused on a yearly, more long term view. Before, it's kind of like having that 50% cutoff on each quarter is like, boom, you got to outperform, boom, you got to outperform. Because, if you don't, well, then look what happens at the net return of your original investors, right? It starts to lose a lot. And that's how I was a bit more pressured, to really outperform so well. I didn't realize it at the beginning, but looking back at it now, it really seems more like it'd be up. Like it seems, it's kind of obvious how that was a contributor to take some more riskier decisions. But I think now looking at it more long term review, it looks better. It's also more fair. It's just better overall. And there's a bit more hassling on the financial side I have to do, but I can do it. Just a little just small issues, but I've been able to fix. So that's been good. So quote unquote terms, this is quote unquote the worst quarter I've had. We've had 4 quarters, 9%, 13. What was it? I think 13 something. Maybe it was around 13%. Then we had 50%, and then we had 20 point something percent. I think like 22 or whatever. Might have been a bit higher, but it was in the 20s. So, and now we had negative 22. By Monday, recording this, we're around negative 19 point something. So you can see already we've changed quite a bit. But, it's not unexpected. You have such insane returns on each quarter. You're kind of expecting one to fall a bit. So, I'm not too sad about this quarter, especially further on in the video. It's really the trades was just kind of one I messed up on. It's really all the other ones were pretty good, and then this one just really caught me off guard. And typically I'm pretty good at risk management on that side, but this one kind of just messed me up. So something to learn on, and not to repeat again. But let's continue. So I don't know if the font is orange or not. I just have the night light on. If it is, I've had to record this video like 3 times, so it's okay. Over here we have the quarter. So here we have 3 months. This is a full 3 months, a little bit more maybe, but really at the start, we're doing really good. I mean, we're looking to have another great quarter. We hit a peak around here. Let's see, around 16% it looks like. 12, 14, 16, 4, 8. I mean, yeah, it's 3, 6, 9. So, I mean, it looks like it was around 16%. That was really good. Looking back at it over here, before this quarter started, I think there was a 2-week period because I was moving and not vacation, but I was traveling and all that. So, I did do some trades in that period, but before, when I started this quarter, I think I was in some Palantir stuff. I was in some Palantir long, and this was after the short release or the short report, which dropped the stock from like 200 to 150, and I was buying in right then, so I was doing good on that. Right now the price is basically back at that area where I would have sold. So, seeing now we'd basically be neutral, which is better than negative 22. But it's not something, that trade would have been a lot better. But it was fine because I sold it for, I think, a slightly red. I was holding it for a while over here, and you can see I kind of got tired of it. And then I decided to switch over. And I think I started a HIMS position, which made me gain that 50% on the first quarter. And I started that, traded it for a good amount, earned a good amount on it, and that's where I was around the 12% area. So over there, I was like, all right, what should I do now? And then I started an Ethereum short, and that was when Ethereum, I think it was around 4,000. It might have been. It was pretty high. I think right now it's at like 2,000 something. But that would have been. That's when my Ethereum short kind of started. That's where my shift more into the bear case started. I had been quite a strong bull since. Really the start of Q4, even middle of Q3, sorry, because at the beginning of Q2 of last year, Q3 of last year, I was doing my MicroStrategy short, and that was kind of based on Bitcoin, and it wasn't a good trade at all, but that trade, I said, all right, let's just switch it, go to the bull case, and then that's where I started to be more bullish. That was when the HIMs started to gain a lot, and so that was at the middle of Q3, and then Q4, I sold my HIMs over there at the peak basically, and then you had Q4 happen. In Q4, I was mostly long. I don't think I did many shorts, very little shorts, in the majority of the quarter, so I was mostly bullish then. I was quite strong in it, and I was going in strong for Q4 to on Q1 of this year. I had a mostly strong thesis until really this Ethereum short, which is one of the bigger ones. One notable short though that I did do in Q4 at the end was a super MicroStrategy short, garbage company. So just shorted it because it got way too high, and that was a good position, which made me good around 10% on that quarter. So all things considered, I did do a short then, but that wasn't a major overall thesis that I had thought of. And that's why in the 2 weeks before this, I also had a CoreWeave long position, which would have exploded upwards and now downwards. But supposing it would have sold, in that period, which I would have had some sell limits over there at those levels because it went explosive, it went huge up. I did go long then because it was very cheap, and it just kept on going back down, and I was like, come on, man. So I decided to sell that. I think CoreWeave I sold a small loss, which is fine, considering the huge volatility of that thing. And then I did some Google stuff, which, it's right now Google seems as the strongest company in the AI race, which it is. I mean, it most likely is. I was pretty bullish on Google. I was bullish on Google. I bought Google before August. I bought it I sold it at 190. That it's kind of been haunting me a bit, but you just gotta let it move on. I had bought Google, held it for a week and a half, maybe 2 weeks, and all I had the court cases coming up and had a lot of big news coming up, so I was just been doing nothing, and I thought I was missing out on other gains from other companies, so I decided to leave that trade. But I wasn't shorting it, right? So I was still mostly doing long positions, and even after all that, I think that was the most consecutive trade that had gone well. I closed too early. After all that, I still reached around 12% here, which is still very good because you have to consider, even though I missed all those trades, we still had insane performance. We still had 9%, 13%, 50%, 20 something percent, and then we were looking at another 12%. So these are crazy numbers, and really over here you have the Ethereum pool. So this is kind of where you start a big short. I think the shortest big short was probably the Ethereum's since all MicroStrategy times, which that was a Bitcoin short. Here we have Ethereum short, same, not the same thing, but same thesis. And I closed it for neutral, and I was that's what made this little spike jump, or quite a big spike jump here, 6% spike. I sold it for neutral in the end because it did quite a strong comeback. But since then, that's kind of where I've been starting being on the more bearish side. The only problem from that was I messed up, right? So now we start the dropping area. So what happened over here? Well, what happened was two positions. One position was I started to do over here. So right here, I started to go, right? So let me think of something else to short, because Ethereum was kind of going up and down. It was pretty annoying. Any type of pullback that it had, it just went right back up. So typical crypto moves. But I was like, all right, what else is looking that's way too overvalued? And if you look back on one of my videos, I was talking about, huge valuations, billion-dollar valuations, probably tens of billions of dollar valuations with basically no revenue, probably negative revenue, or not negative revenue, but negative net income, negative, just insanely overvalued. And these were the quantum stocks. The quantum stocks have been in the spotlight for a long time, and they've had insane, both ways. They've had huge run-ups, huge run-downs, and I knew about them for a while now. It's been a long time, but every time it just seemed like they're just kind of just following the momentum trade, which they are momentum stocks. They're high beta momentum, just kind of garbage companies that are caught in the wind because people just yell their life savings into it and, hope to make some money off of it. And so if everyone does that, well, the company goes up. And, all insiders have sold their shares and basically of all these companies. So CEOs have left. They're not in great situations right now. And so it had gotten to a point where I think I started IonQ short, and this was probably I made some the IonQ short. I think, yeah, I started it. I made some good money off of it in the first couple days, and then it just started to reverse. And then you know how a quantum is; it just went explosive to the peak, and I think IonQ's around the 60 range, maybe 70, and then I had to close it out. And so when I closed it out, we were around 0%. So I was already took a big hit, and I'm like, all right, well, if it's just gonna let it, I had to sell it because I'm not sure how high it can go. So I let it go up, and it kept on going, hit 84, and really from then I started a new position. Like, okay, maybe the whole bull run isn't over, and we're maybe still in. There might be some time left the next 2 months or 3 months for maybe some Santa rally type thing. And this was my thinking back in early October, as you can see. And early October is kind of really, you can see the end of really the peak. I mean, we don't know yet, but SPY's had a pretty good comeback since the big drop we had last week. But it was sort of it's been a big sentiment shift since the beginning of October, where everything was literally bullish. Anything that came out was good. Everything was good. There's no problems. AI is great. And so really, I decided to just start a long position. And that long position, it kind of dropped us down over here to -10, but it brought us strongly right back up to 1 or 2%. And I decided to sell it here. So I did the right trade and I sold it. This was the company SoundHound. I decided to, it's just a momentum stock, so I decided to play it out, and it worked out really well. So I was like, all right, great, and now maybe I can start shorting again. The thing is, the problem is here is I rebought it a day later because it seemed like I was just looking at it and it didn't really seem to want to fall. But it was kind of, I was like, it was a weird place because I wasn't too sure of what to do, and that's when you don't want to do something, and it was kind of in a weird spot where everything was very high, and you weren't very sure exactly what was gonna happen. And so I was like, at the time it seemed like a reasonable company. They had gone through, and they have survived a lot of financial hardship, and they're still alive today, and they're still competing against the OpenAI and Gemini and all that. But it's kind of where you just get to emotionally attach to the position. So I sold it, and I was like, you know what? I'll go back in here. If it goes down, then I just sell it off quickly. And it kind of just kept on falling for no reason, or not no reason. Kind of that was part of the sentiment shift, but there was no news affecting it, and that's where I was getting confused on why it was going down. Typically, I mean, going down, we're talking about more than 20%, 30% drops. You typically don't have that without news. And the weird thing was, at the time you were getting good news. So the problem is, when you have quote unquote good news and the stock is not going up, that's not really good. That's when it's also a key point in a bear market. We're not really in a bear market, but in cases of bear markets, when you have kind of strong news, it's just not doing, it underperforms on the news. It just does bad. And we're not talking about having, that typically happens when a stock has gone really high up, which makes sense. And in this case, that's what happened. But I didn't really see that at the moment. I just, I was like, all right, well, if this is what the market thought of the prices, that's what I'm going to buy it at. That was the first error, really just kind of taking that part for granted, where, it wasn't really supposed to be valued at $20, and each day, dude, it just kept on bleeding every single day, just kept on going red. And then there was some over here, some small glimmers of hope right over here. So I was like, all right, let's start going back up. The stock market was mostly going up. QQQ, SPY, we're seeing kind of strong, even though through all the turmoil. I was like, all right. And then I kind of just got stuck to the position. And that's the first problem you want to have. I had the same issue here with MicroStrategy, where maybe fundamentally your thesis makes sense, but you're in the wrong thing. And that's crucial, because you could be, for example, in OpenAI, and OpenAI is right now not looking so good with Gemini, and someone might be have given billions of dollars to OpenAI, and they're like, all right, guys, we got to speed it up because Google is going to eat our lunch, and they have billions of more dollars to work with. So it's kind of where you don't want to get too attached to your you could be right in the long term, but maybe you're holding the wrong thing. And so that was the case with this. It was kind of just most of the market was moving upwards, and then you have this thing just shedding blood every single day. It was bad. And it kind of just every day you wake up and you're like, all right, another red day, boom, another red day, boom, and it's just bad. You just become emotionless to it. And so that was the problem. I mean, it went down to, I think I sold it off at one point. I was like, if this goes back another red day, and just out of here, because at one point you have to switch positions. That's what in the end why I did with MicroStrategy, so that's what I did here. And that MicroStrategy short was a good sell. Now it's kind of at the same price where I would have sold it, or a bit more. But that was a good sell, mostly because I was able to switch my, I was able to find other opportunities instead of being stuck in the same thing. And so really that's the important part. What you want to do is you want to be able to, just get the loss, or get out and find something else. You made a bad decision. Now you got to, realize it, find out what went wrong, and then go again. And that's really, you don't want to get stuck in it. So kind of got stuck in it. So, that's the issue. And I started slowly while holding it. The back of my mind, I was just like, all right, this bear market's probably going to start coming back. Or not bear market, but this bear thesis, whatever, is going to start haunting back in the media. And that's, at that point, there was a point where I'm like, all right, I was like, okay, yeah, this whole AI stuff is just started realizing that it's not really what it's, the revenue's how it's not going to be able to work out. And the most bullish case, there's probably like a 10% chance of OpenAI ever even working out. And if you do have that work out, it's the long-term view, but it's, you have 1.43 trillion, 23 billion in revenue. And I was just doing some basic math here. I mean, really basic. You have 1.43 trillion, and let's say they have to reach, they want to reach, I think it was around 100 billion in revenue. And this is revenue, so it's not even net income. Which net income to be cash flow positive is going to take a while. So let's say 100 billion they need, right? So if you do 100 billion, that's 5 times what they're currently getting in revenue over the next 100 billion. If they get 100 billion, and you have finance 1.43 trillion, it's still gonna, like, long term, okay, they'll be okay, but it's not a great situation for them, and they obviously need to get higher than that. And it just came out to where the math, it would have to have like every single small business in the U.S. probably paying a pretty high subscription for ChatGPT and all that. If you lowered it, you would probably have like some 20,000, some 20,000 a month models or whatever that are being used instead of a bunch of small businesses using smaller models. But you could also advertise it. Even if you double the revenue with advertising, you have 46 billion, and then you would have to double that again to have double, and you'd still be pretty not in a great situation. So it was just reminding me, I was watching a video, I forgot the video guy, but it was comparing it to the railroad, like bubble, or not bubble, but like there's quite a big stock market boom on the railroads, and then it was a huge technology that was found in that time. A bunch of railroads were being made, and in the end it was just the two big guys, or there's just a big competition, and a lot of the smaller guys just got eaten out or completely gone because it's impossible to survive. So it's kind of where it's that weird situation. And when I sold my SoundHound position, I think it was around this area, I decided to get out of it and just kind of go back to what I was doing back here, which was already, I started my Ethereum short, which was the start of like, all right, some bear things are going to start coming up maybe in the early next year. And then I did again here with the quantum stuff, and reached again positive with somehow, and it's also because I was like, man, I did a good trade here with the same company. I can do it again, and so it kind of just went boom, boom, and then now, at the moment, I sold it off, and then I gained a lot on my INQ. I gained a lot, and I sold it for 16, but 16% gain. So I sold that for a good gain, and then I started another short. I think this one's on Rigetti, so it's even worse company. It's just garbage. And right now we're in the green, so right now we're negative 19. We're in the green on the position, so it's negative 19. I think a percentage overall, so that's quite good. Because it's very hard to go back from. I think we hit a low here. It's very hard to go back from negative 23, even to negative 17. Or those levels. So it's gonna take some building to get back up. Sorry, it's gonna take some building to get back up, but that's how it's gonna have to be. And yeah, so that's what I'm holding right now. It might change, it might not. You'll have to see in the next quarter review, but it's kind of just been my thesis, and that's what I've been doing. I just think if there's anything else I have to say. I don't think so. But yeah. So there's also some other videos where I kind of explain a bit better, I think, some AI videos, but yeah, I just kind of, I'm not bearish on AI, I'm bearish on the AI price that it has right now. And now, for example, I said I'm shorting Rigetti, so I'm not shorting NVIDIA, or I'm not shorting Palantir, or I'm not shorting these names, because there's better shorts out there, and in my opinion, there are those companies which are in a bubble. And those companies just see a better ROI. Now, they're still kind of overall marketly driven. If the market crashes, they're even crashing double that. So it's kind of, they're high beta, which means they're highly volatile with the market. I mean, they have quite a lot. They're also quite correlated in a way. They're not exactly correlated, but they're correlated in a way where it's kind of just, markets go up, well, people put their money into risky stuff. Markets go down, they take their money out of risky stuff. Just basic theory like that. But so yeah, I'm just shorting those because it's just the worst names, easier return on investment, and I earn a lot more. Nvidia crashed really after the earnings on the same day. It's weird, around early morning it just started reversing, which is kind of rare. Typically you see those reversals maybe exactly on the morning open or at night or PM, but no. So that was interesting. And that's what I'm shorting. So I'm not really exactly shorting NVIDIA in those names, even though they have fallen quite a bit from their peaks. Are they going to fall more? They're not. Maybe not. But I just know that I'm shorting garbage, so that's the point. And, that's typically what you want to short. You want to short garbage. This is the dollar, so this is better looked at. This percentage-wise is better because it's better on the number that it gives, because it's not really compounded. When you lose more dollars, especially in the negative 10 or negative 20% range, it's harder to come back. So this might show plus 6% at some point, but I'm actually neutral because I lost negative 20. So this is kind of a better graph to show it because it's a bit more of an effect. Now the y-axis is taken off because that shows the dollar value, but it's kind of, you can see it's a bit lower than the percentage one. And so here we have NASDAQ. So NASDAQ had an insane reversal, as it always does, really. And you can see over here, it also made us take a bit of a dip, but we have kind of going up with it. And that's kind of what I'd like to see, where, garbage, the quantum stuff is not correlated with the market at the moment. It's kind of inversely correlated, which is what I like to see. I want to see red. Over here, so this week was not great. Monday messed us up, and the rest of the days just followed in suit, and now we're actually green on the position. So really just a fake week, a dumb week, and we're back at it. NASDAQ almost hit 5% on the week. Insane reversal. Not the bigger names has not seen as much of a reversal, but interesting how it is. Over here, overall, so NASDAQ hit 8% overall in 3 months. That's a quite astonishing return. Looking like if you were to multiply that by 4, you can already see that's a huge return on the year. 40% of outperform days since we started, so not great. I'm hoping to get this number into the 50 range. SPY also did a quite strong return, looking at new all-time highs. And really, it did fall 1% overnight. And I think it ended negative 0.5, but it did hit the -1%, so it's kind of lost a bit of the last week's gains a bit, but it's still, in that strong category. I mean, it's not um, like dropped or huge or anything. It's still reversed a little bit, nothing crazy. And 40% of days too. And over here we have not 8% but 7.8, which is still very strong for SPY. The question is, when are these numbers going to stop outperforming so much? So Dow, not as strong as all the other ones, still pretty good rally back up, 3% on the week. And overseas, so this is the outperformance, the highest one, 42.7, nothing significantly different though, but it's okay. And Dow overall is at 5% exact, so you can see it's not super strong. That's what NASDAQ did in a week, which is, you can see how NASDAQ is just an AI index, and its SPY is already quite overly weighted to NVIDIA and the tech sector, so that's why you see a lot higher returns and more volatility. The equal weighted SPY index is probably a better measure if you want to get less risk. So, yeah. And here you have everything, so you can see kind of everything on the way trajectory. I don't know if it's yellow on the screen, but over here you have kind of NASDAQ and SPY all together, and then you have Dow on the bottom, and then here we have us. I think right now we're around here. And, I don't know, I can't really predict much, but I just know at some point we'll probably be somewhere, and or not know, but I can expect, with some certainty, but it's kind of just wait and see, and hope we just keep recovering now. I mean, it's kind of just how to just wait and see how it goes. The December meeting. Also, we had a big rally also in the week. I forgot to mention before, because the probabilities of the Fed cut increased a lot. And that was mostly because two other governors, which are typically on the same boat as Jerome, wanted or mentioning how they wanted to cut the 25 basis points. And that also drove quite a bit of a strong rally, which kind of makes sense because most of the fears were based on that. Now there are also fears on the AI debt rate, the AI debt thing, which is quite a bigger concern, to be honest. But yeah, so that's kind of what happened. And I'm kind of happy the market had such a strong recovery because it's basically priced in a rate cut. You had a 5% on a week on NASDAQ. I mean, you're really just asking for a reversal if you don't get exactly word by word the news that you want, which is probably not going to happen. It could always keep on going up, but it's kind of where, all right, you got a 5% on a week, like, okay, you already lost today, I think 0.5 or something. So, and NASDAQ was down already 1% on the morning on Monday, and really nothing much changed since Monday to Tuesday, on Sunday to Monday. Futures actually opened green and then reversed quite bigly. So it's just kind of like, all right, doing it what it always does, overpricing everything. And so that's good though, because you can just short it if you want to do that. But that's why I'm shorting some other shit stuff. So here we go. I mean, it is what it is. But we have, markets going up quite a bit, and we've actually continued going up on that, so that's good. And now we'll have to see. But my idea is, even if we do get a cut, which I kind of hope we don't, but if we do get a cut, then it's going to be, all right, we're getting a cut because we have to for this AI stuff, because we have to keep that. We don't really care about inflation right now. We just have to get people working and stuff. And really, the AI job openings since ChatGPT have not been strong. They've actually been on a downtrend, and that's as expected. The labor market for people is not good. A lot of people I've talked to are having trouble getting, especially software engineering jobs. It's not very strong, and they don't pay well if they get a job. It's not great. And even with Gemini 3 coming out, you can basically see a workforce of 10 being reduced to maybe 2 or even 1 in some cases. It's kind of like, okay, and the point of a company is to maximize profits and shareholder value. So if you want to do that, just get an AI, hire the AI, and do that. Now, will that AI, will the company pay enough money for that AI to, in the end, OpenAI or Gemini to make as much revenue to cover their costs? For OpenAI, probably not. I mean, I would argue probably not. For Google, they make billions, so they can do whatever they want. And they have the best model at the moment, so it's kind of like, okay, they're for sure most likely the winner, even though everyone's been saying that. But it wasn't obvious, but there were signs of it, in August and September, which is why I did buy Google, but just didn't really see the ROI at that point. But that was a bit of a mess up. Anyways, over here we have the daily percent gain, negative 33, so not great. It's a bit mixed. In the beginning there was more volatility, now it's been lessened, so that's good. Green days 44%, not great. Profitable trades are 55 right now. If you count the new one, we're around 58. So getting close to 60 range, which means that when you have a lot of profitable trades, you can still be down quite a bit. So you just gotta be careful on those wrong trades. And that's you'll see later, the negative average hedge number is not good. The gains did actually go below the losses, interestingly. So they did go below slightly, and they're almost exactly equal. The standard deviation did decrease quite a bit, so that's good. But over here, I think, is that number correct? I'm not too sure, but I think it should be. Let me check over here. Let's see. So let me just quick do it. Sometimes I miss a couple numbers on here. Let's see, 0 times, hold up, 3 point. So I just want to check this. I say 4.45, and the standard deviation for SPY is 7.6, and ours is 338. So 338 divided by 0.76. Okay, so it's the correct number. I just thought it was a bit higher, but if this number is wrong, there'll be a comment on the video. I just don't want to re-record 36 minutes. So here over here we have that standard deviation, and you can see SPY's gains are not as strong as or not as big as their losses, which is they're gaining 0.57 and they're losing 0.63 on a day. So they want the ratios are better, and that's what shows over here. The difference is not as great from last week, but our standard deviation is down, so that's good. And over here, mean transaction, that's quite low because I've mostly been holding, and that was kind of that period, within a good period, but I was just holding. So that's kind of what decreases by quite a lot. Day trades almost none. I think like 2. And here you have everything that I was talking about. So basically here you have your SPY, here you have your PLTR, your Palantir, here you have your HIMS, here you have your CoreWeave, here you have your Ethereum, here you have your IonQ, here you have your Sound, and then here you have your Rigetti. And so what this means is each day I mark what I held for that day, and so the more amount of days, so this is around 50% because it's on 50% of it doesn't mean it was on 50% of the days, but it was 50% of the portfolio because I typically hold 2 things, SPY and whatever else I'm holding, so that's why it's around 50%. And so example, like, if the bigger the part of the portion of the circle, that means the longer time I've held it. It doesn't mean the gains or whatever, it just means the longer the time I've decided to hold that position. So I could have, for example, HIMS, you can see right here is on a 6.5%, but I did make quite a bit off of it, where here you can see the Sound Hounds are on 20, but I did lose quite a bit. So it's not correlated to your gains or losses, it's just the time I've held the position. And yeah, so that's interesting. Here you have the trade, so how many trades did it correct? So Palantir, I was a bit red, so I did lose here. I only did, I think, 1 or 2. HIMS green, CoreWeave green. This was actually, so it was green for this quarter, but the 2 weeks before the quarter started, I did lose, I think, on 1 Palantir trade. So I ended overall negative like 1.5 on it. So it's basically 50-50. So that full thing you'll see on the full year review, but that's in a year, or not in a year, but the next 9.23. Here you have your Ethereum. So Ethereum I did good on. I closed it for a slight gain, just to not close it neutral. Here you have the IonQ where I first started losing. I think the first trade I opened, I think, was red, and then red, and then I think I gained when I went back into it after I closed the Sound Hound, and then I went back right now into the Rigetti, which is all green because I only have 1 trade open for that. And then Salix here, so it's 50-50, even though I did lose quite a lot on it, and that's mostly just because there's like quite a bit of trades where I made a little bit of money, but then on the ones, one of them I lost a lot. So yeah, beta has decreased a lot since the quarter. Since at one point we were like 2.3 or something, maybe 2.5, I don't remember, but it's been decreasing, which is good, which is kind of showing where I'm more. I've been decreasing my beta, so I'm more bear compared to SPY. Now I'm still above 1, so a bit bull in a way, but right now the portfolio is negative beta, so it's going to be decreasing in the coming future. My goal is to get this to around 0. Overall beta for the portfolio is probably around like negative 0.8 or something. Jensen alpha, so really this is going to be negative because we didn't gain anything. There's no outperforming, so there's no alpha. So negative 0.32. This number is kind of insignificant at the moment because we're so low. We're not so low, but we're not doing good. So for the quarter, so it's not great. This number would have more sense in the full inception type portfolio video, but right now it's not really too valuable. Sharp ratio, so for us right now, negative 0.83 compared to the SPY of 1.07, so that's quite strong in only 3 months. If you analyze that, you have an expected Sharp ratio from this quarter extended over the year to negative 1.61. And for SPY, it's around 202, so SPY's is really strong. You know, I don't expect that to really, SPY doesn't really hold as sharp at 2, that's quite rare. I mean, obviously if you go from the lowest point of SPY, you know, after the whole tariff thing to now, it's probably very high, but you know, SPY is typically not that strong on their sharps. I think it's average around 0.6 or 0.7. So, and you have the Fed rate cutting, which seems bullish, but I mean, it's just to mask the problem in the economy. So it's like, okay, no, this is probably not going to hold that strongly, but we'll have to see. Sortino, so this is not looking at your negative standard deviation days, and right now for us it's negative 2.6. It typically amplifies whichever way you're going, so it typically does, but you know, if you have a lot of, for example, I mean, it helps in the case where, you know, you're maximizing, it takes out the red days, you know, where you have a lot of standard deviation in those days. Takes out that standard deviation, so it you know, I mean, ours is just greater because or it's lesser because it's just looking at the days that we gain, so it's not going to be that strong. And then over here I have sharp, or my bad, I went back up. The Sortino SPY should be right here, which is 2.51. So if you take out all the days that it went down, it's going to have a better standard deviation and less standard deviation, which is better. So yeah. Here's expectancy ratio. So I used to do this on the daily percent gain on the day, and now I made it on the trade, which is what it's supposed to be. I didn't really realize at the beginning. I guess you can look at it both ways, but on the trade numbers, obviously it's going to be negative because the trades have not been that strong. I should have had over here the overall average hedge number. Right now, I think I just saw it today. The gains. The problem is I still have an open trade. So the gains on the average hedge, I think, was on the positive trades around a 10% return. However, on the negative trades, I think it was maybe around negative 20%. So the thing is, the negative trades that I've had have basically just been that one trade, and all those some smaller ones. So it's been decreasing it, but it's still around negative 20. And you can see that big difference kind of correlates to that negative expectancy ratio. I'll add those two slides in here. I think they're in the yearly video. I just didn't add them in here. So, you know, I'll add those in right now, and yeah, I'll check on the comment, just make sure the standard deviation that's correct. I'll do that. And that's the video. So it's a long video. I don't know how it got so long, but it's done, and it's a quarter video, so probably no one's gonna get this far, but if you did, congrats. And another great week, another great happy Christmas soon. Finals are gonna be soon, and I'm going to be back in LA, so that's going to be nice. I'm tired of, right now I'm in the great state of Oklahoma, so just going to get moving back for just the winter break. And yeah, I'll still make videos. I think the next quarter is just going to be the next week, so whatever this week started, just count 3 months. That's the new quarter video, so that's what I'm going to do. I should probably note that down, but yeah, that's what I'm gonna be doing. Thanks for watching, and hope you liked it, and see you again next week. See ya.